Hello guys, in last video we discussed up to this. Next, they given an example with data. From this, we have to first write in journal entries, then we have to post in corresponding ledger. Before seeing this example, in this video we see accounting categories and then debit and credit concept. Then we will see this example. Okay, after seeing these two concepts only, we can able to understand this problem and it will be easy for us to solve. Accounting categories. Accounts are broadly classified into two types. Okay, one is personal account and then impersonal account. Impersonal account is further divided into real and nominal. So totally accounts are classified into personal, real and nominal account. First one, personal account. The account that shows the transaction of customer, supplier, money lender, bank. These are known as personal account. In personal account, they further divided into natural, artificial and then representative account. Natural personal account. The natural person, we human beings, okay, created by God. For them, we are maintaining an account is known as natural person account. Example, proprietor, supplier, receivers account. Some person, we are maintaining account of some person. And then next, artificial personal account. Artificial personal account means, as we seen earlier, corporate bodies, institution, these type of firms is known as artificial person. Accounts maintained for them is known as artificial personal account. And then next one, representative personal account. Suppose an account represents a certain person or group of persons. They given an example. Suppose for business, they take 15 shops for rent. Okay, 15 shops for rent, but the shop owners of 15 shops are different. For 15 shops, there are 15 different owners. Okay, that shops we are taking for rental. Suppose if the business is not able to pay the rent, then for all the shops the rent payment is outstanding, the amount is due. So what these shop owners are doing is, instead of 15 members collecting the amount, they will, all shop owners will be together, they add all the overdue amount, put under a common head known as rent outstanding account. Instead of 15 shop owners to follow up that person, that 15 shop owners will mutually came into agreement, they will create a common head rent outstanding account. For that there will be one representative. That representative will collect the overdue amount of the rental amount, then he distribute that amount to the 15 owners. Okay, this is known as representative account that are representing a certain person or a group of person. Here the group of person is 15 members of the shop owners. Next, impersonal account. In impersonal account, first one is real account. In real account there are two things: tangible real account, intangible real account. First one, tangible real account. Tangible means that we can touch and feel. For example, land, building and furniture, cash. These are tangible. The account maintained for these things is known as tangible real account. Intangible real account means goodwill, trademark, patent rights. Account maintained for these things is known as intangible real account. Next, nominal account. Nominal account shows the transactions of the expense and loss. It shows the expense, loss, and then income and gain. The account mainly describes how cash has been spent. For example, if salary paid to employee, rent paid, and then wages paid to worker, commission paid to salary person, salesperson. Okay, like just nominal account describes about the expense, loss, income, and gain. Here they give some of the commonly used account under personal account, real account, nominal account. Just to go through. See what we saw so far. They given in a tabular. Account are classified as personal, real, nominal. Personal is further classified as natural, artificial, representative personal account. Real account is further classified as tangible account, intangible account. Nominal account is further classified as expense and loss, income and gains. Next, debit and credit concept. Account has two sides. One is left side, which is known as debit side, and then right side, it is known as credit side. See, left hand side is debit and right hand side is credit. The act of recording an entry on left hand side is known as debiting the account, and if we are entering in right hand side, it is known as crediting. Then we will make a total debit and total credit. The difference between is known as account balance. See, in last video we discussed that the difference between debit and credit is 100. So 100 is an account balance which is known as debit balance, since debit balance is more than credit. In double entry system, there are two aspects. One is receiving of value and then giving of value. Who is giving the value and then who is receiving the value. Okay, in each transaction, these two things will be involved. This is termed as debit and credit. Every transaction has debit and credit. Okay, an account receives a value or benefit is debited. Who is receiving the benefit, their account will be debited, and who is giving the value, their account will be credited. This is very important. Based on this, we will see how personal account, real account and nominal account will be debited and credited. This is very important in account. This is known as golden rules of accounting. So for this you will see an example. See, Ramesh depositing cash in his account. Okay, if Ramesh depositing cash in his account in bank, then means we will credit Ramesh account. Okay, here Ramesh is the gives. Ramesh gives a value or benefit. So Ramesh is a giver. So we are crediting Ramesh account. It depositing in bank. So bank receiving the amount or receiving the value or benefit. So we have to debit. So bank is receiver. So we have to debit bank account. In this case, Ramesh account will be credited, bank cash on hand account will be debited. Okay. Ramesh depositing amount in his account. Everyone knows that we will credit Ramesh account. How it actually works is, Ramesh is the giver. He gives the value or benefit. So we are crediting his account. Bank is the receiver of the value, so we are debiting the value. Okay, we are debiting the bank account cash on hand. First one, personal account. Debit the receiver and credit the giver. Okay, debit the receiver. Who is receiving here? Bank is receiving. So debit the receiver and credit the giver. Who is giving? Ramesh is giving. So credit the giver. Yeah, they given some example. Suppose if you purchase goods from Gopi on credit, very important word, on credit. It means Gopi giving credit for you. It means Gopi giving cash for you. Okay. In this case, two account involved, purchase account and then Gopi's account. Gopi account is personal account. Since Gopi is giver in this transaction, Gopi is giving the credit, so Gopi is the giver in this transaction, so we will credit Gopi's account. Okay. Similarly, if cash is paid to Gopi, then you are purchasing, Gopi receives the cash. Okay. In this case, Gopi is a receiver, so Gopi account will be credited since he is the receiver. Next, real account. Real account, debit what comes in and credit what goes out. Okay. For example, furniture is purchased for cash. Okay. In this case, cash is going out. Okay. Cash is going out. Purchase furniture for cash. Cash is going out. So, credit what goes out. You will credit cash account. Okay, cash account is credited, and then debit what comes in. What comes in? Furniture. So debit what comes in. Next step, nominal account. In nominal account, we will debit all expense and loss and credit all income and gain. Okay, so all expense and losses are debited and then all income and gains are credited. Salary account is a nominal account. Salary paid is an expense of the business. So this account will be debited. If you are receiving any interest, then it is credit transaction. It is gain for us. So that one will be credited. So they gave a tabular column in simple way. Personal account, debit the receiver, credit the giver. Real account, what debit what comes in, credit what goes out. Nominal account, debit expenses or loss, credit income or gain. These three rules are very important while doing the transactions. For example, salary payment. Okay, if you're making in some payment of salary, it affects a salary account and cash account. In this case, salary account is a nominal account and cash account is a real account. In this, how we have to use the rule is, first one we have to use third rule and second one you have to use for the second rule. Later part for cash account you have to use for the second rule. That they given, debit all expenses and loss for salary account and credit what goes out. Like this we have to use. It should be noted that not only actual transaction we are recording, we have to record even if obligation arises. Suppose a firm borrows 10,000 rupees at 12% per annum. At the end of the year, that company has to pay 1,200 as interest. If interest is actually paid, how the accounting entries will be made? If interest is actually paid, okay, in this case interest is received. Okay, so interest account will be debited. Debit what comes in. Okay, and then it is given as cash, so cash account is credited. Credit what goes out. Suppose if cash is not paid, then what type of entries will be recorded. Anyhow, if he is paying that 1200 or not, he have to pay in future. Anyway, you have to pay 1200. Okay, it is obligation. In this time, at this point of time, how the accounting entries will be made. See, the entry will be debit the interest account. Anyhow, we will receive interest, so interest account is debited. Actually, who need to give the money? Lender need to give. So we have to credit the lender account. Anyhow, lender need to give, so credit the giver. Suppose later on, if amount is paid in cash, okay, if amount is paid in cash, what goes out? Cash goes out, so credit the cash account. Then which account we need to debit? Since anyhow cash is reduced, then lender account will be debited. Okay, lender account will also be reduced owing to this amount reduced. So in this case, we will debit lender account. This is if actually amount is paid. This is if amount is paid later on. See, in this case, if we nullify these two, debit interest account, credit cash account, both entries almost same only if cash is paid later period. From this example, they are trying to say that if obligation arises, for that we have to make entry. Okay, very important. For obligation also we have to make accounting entries. What is the significance of debit and credit in types of account like personal, real and nominal? See, in personal account, if account is debited, what it indicates? If it is a new account, then first time we are making debit entry means then that person will become an debtor of the business. Okay, if account is already there, whose account is being debited, okay, then again you are making a new debit means it implies that due for that person increases. Okay, suppose if person is a creditor of the business, that debit may implies either it may reduce that credit amount or he may become a creditor to debtor. See, for example, is a creditor 10,000 rupees plus only. If debit becomes a 20,000 minus 10,000 you have to pay. At this time, he became a debtor of the business. In same way, what credit indicates? If it is a new account, credit implies that a person is a creditor of the business. Okay, and then if a person is already debtor, then debtor can become a creditor of the business. See, like same case, if he is a debtor for 10,000 rupees, I am making an credit 20,000, then 10,000 will be in credit. So he became a creditor of the business. Okay, in real account, debit implies that business acquires more asset. Something is purchasing an asset, for that purpose is debiting real account. Credit means reverse, is he made a sale of some asset, so that amount is credited to the real account. Debit in nominal account means expenses and loss. Credit means income or gain. Okay, in next video we see this example 1, 2, 3 and 4 in clearly.